gentleman from Ohio, Congressman Turner.
Thank you, Mr. Chairman. I want to thank you, Mr. Paulson, for being here and your description of the environment in which you were in and your actions. You know, it's interesting. When we have hearings, we basically try to do two things in hearings. Find out what happened and find out, should it have happened? Why did it happen? Is this the appropriate action? That's the oversight. Why it happened is a factual issue. Now, on the factual side, what we hear from you is that you don't deny that you told Mr. Lewis, don't renegotiate and don't back out. You disagree as to whether or not it was an actual threat for his removal being the consequences, but you told him, don't renegotiate, don't back out. And the why, you say, is because for the American people, you believe it was irresponsible, that the interests of the shareholders of the Bank of America were the interests of the nation, which the financial markets were at risk, and apparently $12 billion is not material for you to believe that a material change had occurred, and you cite your vast experience. Now, you also say that you have taken actions, that there's been removal before. You cite the actions of Fannie, Freddie, and AIG on removal. Those were so different. You had failures of organizations. You didn't have just merely a business deal that was going forward. So they're really not comparable. I mean, I don't think you have an instance where you can provide us that's comparable, where there's a threat from the Treasury Secretary for the purposes of removal of a CEO for a business transaction to go forward, unless there are other threats that you put forward that we're not yet aware of. Now, the thing about your vast experience that just really strikes me is that you really have no exact science with your vast experience. You cite the impact on the markets, your view of this deals, the impressions of how the markets might have an impression, which is not a science. There is no accounting problem from which you made your decision. There is no data point from which you made your decision. And with all the responsibilities that you had, which apparently somewhere around that time includes skiing, there was no way that you could have been up to speed on the economics, the due diligence, the specifics or the details of this deal, to the extent of someone to intervene enough to say, do not renegotiate this deal and do not back out. Now, I agree with Representative Lynch. I absolutely believe that you misled Congress. And I want to take you back to a meeting that you had with Cheney, yourself, Mr. Paulson, and Bernanke, where you came before the Republican conference to explain your $700 billion bailout deal, which I voted against. You came forward and told us that you were going to buy toxic assets, illiquid assets, and if these were not removed from the market, that we were going to have calamity, and that the crisis was those toxic assets were causing, again, the markets to have instability because the markets had the impression that these toxic assets, having no value, raised questions as to the value of the institutions. I thought it was a crock then, and I voted against it. And then you turned completely away from the toxic assets, and I believe that you were misrepresenting Congress. I don't think it was an issue of just asking for flexibility. I also voted against it because the deal was, you didn't tell us who was going to get the money, you didn't tell us what the money was going to be used for, you didn't tell it was how much, and the part that was crucial to me is that you didn't step forward and say, these are the changes that need to be made in our regulatory systems and the laws to make certain that this never happened again. Now, the other thing that was important to me is that I believed that we were about to participate in the largest theft in history. I come from Ohio, ground zero for the mortgage foreclosure crisis. So when you were standing in front of us asking for $700 billion of taxpayers' money to bail out what you called toxic assets for these mortgage-backed securities as a result of the mortgage foreclosure crisis and the credit default swaps, I realized that you were asking me to give taxpayers money to bail out these people who I believe were systematically defrauding my community and the people who were buying houses and refinancing their houses with overvaluations. And I had a great concern, as did my community, that the underlying collateral for these mortgage-backed securities was not there. And that's ultimately what took down the valuation of those mortgage-backed securities. So my question to you is, Mr. Paulson, in your vast amount of experience, since you were in this position in July of 2006, while the mortgage foreclosure crisis was raging throughout the country, and your description of people losing their homes was happening then, not just in 2008 when you stepped in with your TARP program, there were record foreclosures. Mortgage-backed securities were being traded with significant questions, I believe, in the market of the underlying value of the collateral. Subprime mortgage lending was spiraling. Refinances were increasing based on inflated and escalating property values. Where was your vast experience then, and what do you believe we should have done in 2006 to have stopped this?
Well, first of all, if you are making the comment that I did not see this crisis coming to the extent it came, you're absolutely right. Okay, I like many others, underestimated this then, number one. But what I did do very shortly on arriving was began preparing for a financial crisis. I began meetings with the President's Working Group on preparations, number one, and number two. Although I would take exception with a lot of the things you said, I began working on a plan which we had announced in March, well before I went to Congress, to overhaul this outdated, inadequate regulatory system. And so we came out with that in March, came out with recommendations that we needed the authorities to wind down these non-banking institutions if they get in trouble so they don't have to be bailed out. The only other thing I would say to you was I am not disputing the fact that when Ben Bernanke and I came to Congress, we understood that illiquid assets, because illiquid assets were at the heart of the problem in the financial institutions. That was at the heart of the problem. That was a major cause for the losses, for the illiquidity, and so our approach was to buy those illiquid assets. That was our primary approach. And we learned, and as the situation began to crumble all around the world, and it was so clear we had to move quickly, we needed to change gears. And I made the decision that when the facts change, you need to move quickly and change. And I'm just saying, the only point I was trying to make wasn't to say we didn't come to Congress and ask for illiquid assets, but thank goodness when we came to Congress, we also asked to have some flexibility, and Congress gave us the flexibility. And so, and the last point I would make is the people I care about are the same ones you care about. The American people, the people that are going to lose their jobs. And the tragedy is they didn't create the problem. It are the big banks that created the problem. It's a whole lot of, the problem was created not by them, but they would be the one that would pay the greatest penalty if there was a collapse. And so that was what I was working for.
The gentleman's time has expired. I now yield 5 minutes to the gentlewoman from